Hey, what's going on, guys? It's Will. Hopefully, you're having a great day today. It is Sunday, which is an awesome day for all of you investors out there that are looking at the markets. You're getting ready for this week, and we're going to go over some top data center companies along with some AI companies. And congratulations to everybody in the quantum era. Right now, we've seen a lot of great movements in quantum. Rigetti was up 175% on that position we're in, but we're seeing them surge about 100% this week. So if you're invested in quantum, this past week has been a tremendous week. So congratulations to you. There's one focus we have, and it's finding undervalued opportunities that can create more freedom for you, build that freedom for you. So essentially, quantum has done that for almost everyone. It's absolutely crazy. It's absolutely crazy how much we've seen quantum go up. So we're gonna look at some other markets that, number one, are seeing explosive growth because of AI, and then number two are seeing more investments from big tech, and then number three, some of them are already looking a little overbought at the moment. We're gonna jump into it. So how's everybody doing on this Sunday as we get ready for the market? Go ahead, comment any ticker symbols below, and we're going to jump right into APLD. So, first things first, if you guys have any ticker symbols, comment them below again, and get ready as we jump into this APLD stock. So, the first thing we're following here is I see Elvis in the chat. I see Tomer in the chat. Thanks, Tomer. Thanks. Matthias is in the chat. Kevin is here. Let's go. Let's take a look at the market today. So, getting ready for this next week. APLD is the first one on the list. And we've been following APLD for a while here, around $2, $3 a share is when we started following it. And APLD, we've seen jump up into what was $20 a share. They've had this very consistent uptrending pattern. We see them get into $12 highs, sell back down to $9 through August, continue to run up, and then here into September, making that surge to highs of $20.80. And right now, kind of getting ready for this next week, they are up to $20.71. So, a couple really important things to watch with APLD. The first thing is when we're watching data center growth, we're really looking for the AI expansions from AI companies, and we've seen that. So they've gotten CoreWeave, big data centers they're building out. They are focused on power and cooling optimized facilities. They're building these actually constructing the data centers with Supermicro Computer as one of their partners for once they have it built. NVIDIA is a partner, along with, let's see, Dell Technologies, Intel, and some others. So they're continuing to build their data centers right now. And that's something we're most likely going to see reflect in their balance sheet. So now that they get back up into this $20 range, we haven't seen them there really since 2021. From a trend perspective, they do look overbought. Now, when we're trading them in the short term, there probably won't be any short-term positions that will be entering on APLD this week, guys. At least personally, because I usually find that if they're at this resistance, especially in these uptrends we found, they could surge a little bit more, but you're going to find a higher risk of sell downs of about 10 to 15%, down to $17, $18. So we're just going to hold our long-term positions here. And if an opportunity presents itself, we could look for a buy. The nearest support level is at $19.75. So they're at $20.71 now. That's the nearest support, 19.75. So we'll see if they do drop down to those levels at all this week, and we'll monitor that. So data centers off to a great start after last week, and I see that DC Smith in the chat says, is TSSI oversold? We could take a look there. Kevin says, let's go, it's looking green. Kevin, thanks for tuning in, and Jonathan, thanks for tuning in here. Top 5, AMD, SoFi, IonQ, Open, and a put on Oklo. Got it, Jonathan. All right. Yeah, I mean, Oklo is a long-term play, but they've surged tremendously recently. So that's one to watch for sure. Um, awesome. And what's going on, Thomas from Berlin, Germany? Thanks for tuning in. So the next data center stock that we kind of covered on Friday was TSSI. And we are looking for this move here, about a 32% increase up into $21 a share. We've seen this data center stock really start to build its market cap over the last few months. And we're looking at this level here, $21 a share, that it already jumped about 4% today since we projected this previous resistance as a support and potentially running this 30% up into $21. But TSSI is one we'll be watching this week as well, because they're a data center constructor and builder, and their financials are looking pretty good. That $400 million market cap, and they're making about 40 to 50 million a quarter. So revenue's up 260% year over year, and their assets are up to 140 million. They just don't have a lot of equity right now, which is why we're not really deep on TSSI currently, because of their equity. But when you look at where they're at, they're building their market cap. Data center companies are seeing more demand. So the next target for TSSI, if they can hold this $16 support, which they are so far, the next level to watch is that $21 range, which is about a 32% increase from here. So we're really looking for quite the upswing on TSSI for a trade this week that we will be potentially entering if the right opportunity comes along here. Okay, so what you need to know. Long term, they look really good. Short term, they are starting to make this move. They're starting to push back up. Pre-market, it's already looking really bullish. I'm expecting with all this bullishness pre-market, we could see some manipulations and pushes up right into market open, and then see a market dip at market open. A lot of times that's how it plays out, especially because the next stage that follows manipulation, if we do see that, it's possible we'll see accumulation kick in first, which that seems to be the stage. But if we do see any manipulation, we could see a big distribution hit the markets at market open. There was some news, actually, which might not impact tech, but there was some news which we saw, I think, in the last Trump presidency, which was a potential government shutdown here. So government shutdowns happen every once in a while. Okay, there are some from both sides. They're looking for a potential shutdown to have, both parties would be blaming each other for a shutdown here, because I think when it comes to the mostly Democrats threatening to shut down for healthcare funding right now is one of the things. There's some political risks that we got to watch, like Democrats. They're going to fear some backlash here if a shutdown occurs, especially if the market dips, because they're kind of like instigating the shutdown. However, right now it looks like Trump's is kind of refusing to negotiate with Democrats. But that being said, when you just look at there's a funding deadline here for September 30th that is kind of the main focus, and why they could, if they do a shutdown, essentially they're going to focus in on this, and right now they're trying to pass some funding legislation. They're struggling. Congress is struggling to pass it. And so if we see a shutdown, it could impact a lot of lives. Most likely that's a perfect storm for a big correction down, and then probably stimulus checks, which was also something that they talked about with the inflation. So those are things that would cause serious market volatility. So not to say we're gonna see a big pullback, but when you see the markets at highs, that is, and then you have some of those things impacting, that potentially could be a perfect storm for a correction. So just keep in mind that that's what we're watching there if those things play out. But right now, things are still holding in an uptrend, and we're seeing some bullish momentum in the market, especially in data centers right now. Then you got, let's see, Elvis says, do you think BBAI will hit $8 sometime soon? Is Elvis's question. And the bottom line from Tomer says, APLD go down or up, bro. Yeah, I mean, APLD right now has a higher probability of correcting right now. It's at a resistance level. It hasn't come in with its revenue, and it hasn't yet seen the reflection of those deals show up in the balance sheet or in the income statements. So more than likely, we could see a correction down into this $19 range. It's about a 5% correction on APLD. I don't know about a full correction down to that $17 range. That's kind of a bigger correction. But we could see a little bit of slow consolidation potentially, just because of the sheer volatility that they're seeing right now with this huge push up they've seen just in the last week, really up to $21 from about $13. They could see some corrections after that to kind of restabilize and get their footing. So that's what we're looking at right now. But if they continue to break out, then that previous resistance starts to act as a support here at around $20.50, then we're still holding bullish. So that's kind of where it's at right now. We'll have to see how market open goes, because that will give us some more direction for sure. All right, so when it comes to that call outs, Michael Anthony says, what was TSSI's cash? So they're another data center company we're just covering, and again, their cash right now is about 36 million, but their total assets are 139 million. So cash and short-term investments are up 340%. So they have money, they have some runway right now as an AI data center builder, and they do see some increases in their revenue up to 150 million in 2024 and on track to double that in 2025. So they're in a really good spot with that $432 million market cap. They're actually on track to come in with nearly 300 million in revenue this next or in 2025. So they're in a good spot. Now, when it comes to Big Bear AI, that's another AI stock we've been covering heavily, and we've seen some really nice recoveries as of recently. They pushed up into this $7.26 range. Looks like our last projection, we're looking for this total breakout here of about 14%, potentially up into about $8 a share. So they are continuing that hyper bull trend. We've seen them stair-stepping up, and breaking out of that $7 range. Now, with the main focus from Big Bear now getting back up into potentially $8, they're kind of focused on their computer vision, the AI software that you've seen us, go check out in the airports in LAX. The interesting part about their technology is that they are not only working with the TSA to expedite the process of new and old citizens entering and exiting into the US. You can see they have some focus on the TSA contracts with reducing manual labor, incorporating AI threat detection and remote screening. But not only are they doing that quite well, they're also going specifically partnering with the airlines, which I thought was an interesting approach. So they're partnering with the airlines, and they've had some nice recent deals with some airports deploying at LAX, Denver International Airport. Just last week, it was Nashville, and they're even partnering with some professional football teams as well. So they're in the biometrics, passenger processing at airports industry, but they're also in the Panama Canal as well. And what we're looking at was to see that their cash increased so much, up to $600 million, not cash, but total assets, $390 million in cash. They gave themselves a lot more runway. And so now what we're looking at is a growth potential of, if they can continue to ramp up revenue year over year, which is kind of flat the last year, and they keep that net income disciplined in the next quarter, we could see them absolutely surge, because they're looking forward to, and this is why institutions have really scooped them up after the last earnings, and why we've stuck with them, right, too, is because they're getting ready for like the 2026 FIFA World Cup and the 2028 Olympics, which are both coming to America in the next couple of years. And there's going to be a strong demand for that type of technology there. So we're gonna have a really close eye on Big Bear. They just jumped up to $7.33. We have long-term positions, and we've been covering them since about $1 a share last year, and we've rode our $2.80 average as high as $10 a share, all the way back down to $2.30. Really, just kind of adding to our long-term positions. And so, with the long-term investments looking fairly good, the short-term now we see them push up RSI MACD looking overbought. Maybe they hold this previous resistance at $7 and continue this bull trend up into previous highs. That would be perfect case scenario. Now, if they don't hold that $7 range and they can't capitalize, let's say government shutdown hits, or inflation. If inflation stimulus hits, that's going to be obviously we're going to see everything go up. But like, if they continue to see the momentum right now with small cap stocks doing well after the recent rate cut, and they continue to come out with more deals and deployments in airports, most likely we see Big Bear AI continue this trend up into this $8 to $10 range that we've seen them at previously. But if that doesn't happen, if those momentums don't continue, maybe market sentiment changes, things pull back a little bit, market open, something like that, then we're seeing what? We're seeing most likely $7 as a support. If it doesn't hold, next support is around $6.34 there, that previous resistance where they last stair-stepped up from into that $7 range. So we'll be watching Big Bear AI. We do see institutional holdings increase recently. When we were doing some analysis, I was actually pulling up BBAI here, and I wanted to give a jump into. Right now, you got futures are down a little bit. Crypto selling off this morning. Let's see what we have going on. As you saw with Rigetti this morning, the other movements we saw in quantum computing was, just a few minutes ago, I was saying, we got Rigetti positions, and it's been stair-stepping up as well. We're now knocking on the door of $30 a share with Rigetti, with our position up about 180% in our recent trades. But this pre-market right now, what we're seeing heating up ahead of tomorrow, you do see $30 a share basically on Rigetti, then back down to 29. It's just a few moments. It was just earlier this year we were covering them, or I guess end of last year when they were at $1 a share. And we've seen such a massive increase. And shout out to everybody that's stayed with the quantum markets, stayed up to date. We've gone to a ton of conferences, but really there's some great investors that have kept the world in a place where they have their eyes open on what's going on with quantum and why it's such a massive movement right now in technology for the quantum computers. And, that includes, I've seen IonQ's done a great job at the conferences. There's been obviously a lot of naysayers around quantum, which I totally get. They're entitled to their own opinion. Everybody can think about any tech space as much in any way that they'd like. But when it comes down to the sheer potential of what we're looking at with quantum, the reality is there is never been a time in history where you've seen more of a potential for a technology to completely disrupt and compound our advancements like never before. And that's exactly what we're seeing with quantum. So that's why we see them surge. And I'm really grateful for the surge, but I'm also really grateful for all of the investors that have allowed the information to flow freely and realize this is an all-time high. Could we see big corrections? Of course. And it's all part of it. In fact, we wouldn't want the quantum market to go straight up. I, even as a quantum investor, I don't want that to happen. And nobody wants that to happen because when that happens, you lose it just as quickly. When you see the gains, they don't stay. When it gets all at once, it's hard to maintain. And what's in our best interest is for it to slowly and steadily make this run. And we've liked these pullbacks. We've seen these pullbacks. In fact, we could see it pull back down in that $20 or $22 range and be quite happy with that pullback, because slow and steady is going to make sure that when the gains are made, we keep the gains and we get to hold those gains and continue to add and just buy on the dips. So I'm really happy with the fact that some people made a lot as a result of us the covering, and I'm also really happy with the people that learned about how quickly the markets move, and those that sold early have had the chance to really assess the strategy and learn some of the longer term value creations that can be reached so quickly in this volatility. So it doesn't mean we won't see a pullback, but it does mean we're in an age right now where quantum markets are starting to increase in value, and we're just seeing that as a result right now. So there's some really good comments here, and I appreciate you all. We've seen some good ticker symbols. We just covered, Chan says, what's going on with BBAI. We just took a look at it a few minutes ago, and I hope that was helpful for you. Thanks so much for tuning in. Will, any thoughts on Rich Tech Robotics? Rich Tech Robotics is an interesting robotics company, but they don't have any revenue yet. So while they have runway and they have cash, they would be in a similar place to buying what could be. And while that's great, you could also find that you would take on more risk investing in them before they have any revenue at all. And someone said the other day that Rigetti didn't have any revenue. I said, no, it's not that they don't have any revenue. It's just that they have very small revenue. Or IonQ, a couple million here and there. It's not really much compared to the billions in market cap. And that's where you have to say, okay, like a company like Rich Tech Robotics, if you're looking at the stock and you're saying this is how things are going to be 5 years from now, and you can invest in it now, well, that could be a good investment. And a lot of times that means that the market's going to catch up. And sometimes the value will reach a value today that's technically it shouldn't be at that value till 5 years from now. And just because investors see the future of where it's going, they get in early and the whole market finds it and it, boom, gets there. And that's kind of what we see with quantum. That's what's going on there. So same thing with robotics. I think robotics is a wave there. And that's a good one to be looking at for following there, Nicholas, as far as innovation. All right. Cardman21. Will, could you please check if the main YouTube account that you have is blocked from chatting? Yeah, we can take a look there. Of course, Cardman. I don't know why that would be, but I'll have my team have a look. Thanks so much. And looking forward to our session tomorrow. All right, so a couple ticker symbols being dropped in. One of them is going to be Cooler Technology, KULR. For Theodore. Theodore, when it comes to KULR, in the past we had covered them pretty significantly, and we found that they weren't congruent in their company's marketing, and that they were slightly misleading investors. So I don't cover the stock. You can see this depletion as they've sold down and continue to sell down. One of the things that I liked about the company, which is why we've invested in AMD, it's been one of our better investments this year, was that we could see that they were partnered with SpaceX and they were going to do a launch. And AMD is partnered with SpaceX with the Starlink satellites that are running this live stream right now, actually. Um, as I live in rural, kind of like California, I'm in the foothills. So it's like not the best internet. And AMD is a semiconductor. So I love AMD. Now, Cooler partnered with SpaceX to do a launch for their space batteries. That partnership was severed somehow, and they canceled the mission. And they became more of like a Bitcoin investing company. And they were investing more in Bitcoin than they were in their own company. And so that's why I don't cover them anymore, because of how they decided to manage. Uh, I didn't think they were operating with integrity as well with their marketing and stuff. So hopefully that makes sense. It's not anything like, if you like them, by all means, feel free to continue to have a look at them, and it's just kind of how we operate. When it comes to NBTS, Kevin, that's a semiconductor company. So NBTS is going to be over in semiconductors right here. They're up 2.2% today. This is what we got here, Kevin, for NBTS. It looks like we saw them pull down, and we are looking, it's been a couple weeks, but we are looking for them to bounce at $5. And they have bounced so far. We are looking for a 70% recovery back up into about $9 a share. So far, they recovered about 27%. So that's where that one's at, Kevin. So it looks like they are starting to make that move. They continue to push back above the EMA there, which is good indication they're more on the bullish side as of right now, crossing over on the MACD recently and finding support at that $5 range. So yeah, we're looking for it, Kevin. It looks like they still got some time. They might even pull back on the way there, but we were looking for that $9 range. If I'm not mistaken, the reason why was because of the market that they're in. And let's see, they were average market cap 1.5 billion, revenue 15 million a quarter, total assets $500 million. So they had a disciplined balance sheet here. You can see they got much more assets than liabilities, but their revenue is low though, because there's another company we follow, CTM stock, which you know that one, Kevin, because I know you invest in that one. And they have a market cap of about 100 million, and they're doing 14 million a quarter. This company is doing 14 million a quarter with much greater negative net income, and they're at 1.5 billion market cap. So I do think they're slightly overvalued, but in the trend that we were identifying right now, it looks like they were continuing to make this move. And plus, they're in a really good market, which is semiconductors. CTM is in a slower moving government sector for defense, and they're just starting to integrate the AI right now. But they're a solid like fundamental play because they got contracts that are larger than their current market cap. So we're going to continue to watch some of these companies, and I think the main focus for today, guys, is going to be not losing any money for sure. Not losing money because having risk management, especially after a market that's just absolutely surged the last 2 weeks, and we've been able to have gains that could make up our entire year. We're cool to have some clear risk management and have plans in place that we look to be okay with surplus buying power right now. That's okay to have a surplus buying power. And it looks like there was a focus as well on the tech market right now, seeing way more increased market value, not from an investor standpoint, from a problem solving standpoint. While they might look overvalued in a lot of companies, you look at the AI companies and you say, oh my gosh, Big Bear, look at it, it's up 6%, or these companies are up to these valuations. But the market's value they're providing is tremendous, and it's never been so concentrated with market value from these companies. So while the markets are high too, doesn't mean we won't trade bullish potentially and still be able to capitalize on dynamic swings. If we see big pullbacks at market open that we could potentially take advantage of, we will be there taking advantage of those opportunities. some great conversation happening and great investors in here. Thanks so much for tuning in, guys. Appreciate you all. If you ever missed the analysis, this tool for Mercatus, if you want to do detailed AI analysis, we just added some new models. We have OpenAI, the best model of OpenAI. We have Grok, their best model, which is about $300 a month if you want to go get it on your own. We provide it to you. Claude is recently added along with Gemini. And we use Mercatus mapping, which is we go out and get the real-time news, the SEC filings, the insider trading, the chart indicators, all those things, and make these models interwoven, and we integrate all of that data into the AI models, the best AI models in the world, to then perform analysis. So not only do we have a market network where you could visualize stocks, we also have, you could search up a stock like we were just searching, which was Big Bear, and based on an OpenAI analysis along with the press releases and everything else, it's doing it for you. So if you missed it, it's the first link in the description. Go watch the reveal if you didn't catch it, and you can unlock this system. And there's a sweet offer where you get Stockmate as well. Now, if you didn't, if this AI tool you're looking at, you're like, that's great, but I'm still learning, and you are trying to get into a point of understanding the markets, we do go live Monday through Friday. It's the second link in the description below. If you'd like to join us there tomorrow at Market Open, you can join us there. It's the second link in the description. You get to watch me trade live, see my entries, and see my exits. And I'll even send you a free t-shirt when you join. So again, it's the second link below. Thanks so much for tuning in, guys. If I earned your thumbs up, hit the like button. Do consider subscribing. And I'll see you guys in the next video. Take care.